Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. I'm Arjun Parsati, and in this week's issue of Search for Yields, we will talk about negative real interest rates. Now, to explain negative real interest rates, I'll just first start off with what are nominal interest rates, and then tell you what is real interest rates, and then we'll go to negative or positive real interest rates. So, what is nominal interest rates? Very simply put, if you earn, say, 6% interest in your fixed deposit, then you get 6% return on your capital. And every year, you will earn 6% on whatever money you have invested. So, the 6% which you're earning is called nominal interest rate. And this is not adjusted for inflation. Now, when you adjust the 6% against the current inflation level, so if you're earning, for example, if the inflation is say 4%, then every year you earn 6% in interest rates, but 4% goes off in inflation. So only 2% is your net real earnings. So this is called adjustment for inflation, and this is called a real interest rate. Now, if you earn 6% in your fixed deposit and you get inflation is at 6%, then basically whatever you're earning goes off in inflation. And if you get 6% in your fixed deposit and get earn and the inflation is at 8%, then actually you're losing 2% every year in real interest rate. Now, if you look at this chart here, what it clearly shows is in the US, the US CPI inflation is close to 6% or over 6%. And if you look at the 10-year US Treasury yield, the yield is at around 1.5%. So imagine if you're a fixed income investor in the US and you buy the 10-year US Treasury yield, you earn 1.5% every year, but inflation is at 6.5%. So basically, what you're losing every year, you're actually losing 5% in terms of real interest rate. It's called negative real interest rate. Now, all of you, I think every individual, especially in India and the world right now, are facing a big problem because your bank deposits are not giving you anything. In the US, bank deposits are even worse, they're close to 0%, and in Europe too, many of them are negative. And the inflation is running high, very high. In fact, even in Europe, inflation is closer to 5%. So every fixed income investor in the world is facing the issue of negative real interest rates. And this is not helping them at all because if you all your savings and especially risk covers people into investors, most of them have big savings in fixed income instruments. And when inflation is much higher than the returns, they are losing every year, and this is hurting their ability to spend or even survive for many of them. And but why are the central banks are continuing to run such high real inflation? And they do this because they believe that with negative real interest rates, there is an incentive for people to invest in risk, which includes investments, cheap capital, so you can invest in projects and other things to create spending and more capacity, and this will fill up the economy. And at some point of time, they can raise rates, and also rates can be higher than inflation, and real inflation can turn positive. But this is going to be a big problem because the longer you postpone it, the longer people tend to lose out in terms of investing in fixed income. So investors what invest fixed income investors need to look for is investments in avenues which are earning higher than inflation in fixed income, and that will at least help them to earn some positive real interest rates and tide over that inflationary aspect, so that they every year they're not actually losing out on capital erosion through investments in fixed income. So this is basically what you mean by negative real interest rates, which is a big drain for fixed income investors. But central banks continue to hold interest rates negative, real interest rates negative, in the hope that economic growth will far outweigh the negatives of sufferings of investors. Thank you very much. And do not forget to log in to our Quick Invest to check for bonds that yield positive real interest rates to help you in your fixed income investments. And the link to Quick Invest is given in our description below. It's a digitized platform for bonds where you can get all the information that you need, the transparency you require, and the ease of investment that you require. And if you are not subscribed to our YouTube channel, please do so. Thank you very much.